Thursday, January 9th, 2020, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about how you shouldn't lose sleep over the price of gold and the control of the price of gold or manipulation by the central banks and their agent banks, the bullion banks. Before I start talking about that though, I like to first thank all my subscribers, all the viewers, all my supporters of the channel. I appreciate all your interest. I appreciate the PayPal, Patreon donations. That helps the channel. You can also help the channel by going to the Maneco 64 Teespring store. There's quite a few different designs of merchandise there, especially mugs and t-shirts. One of the mugs I have is "Time to Retire the Old Lady of Threadneedle Street and Shut the Bank's Doors." Well, that's the end of Fed equivalent for the Bank of England. The Old Lady of Threadneedle Street is the nickname of the Bank of England. On the other side, I've got a quote that I'll read by the founder of the Bank of England in 1694. "The bank hath the benefit of all interest on all monies which it creates out of nothing." So that was said by the founder of the Bank of England. They hide in plain sight, these people. So before I go into the price manipulation of gold or the control of gold or the campaign against gold as well, I'll look at where the markets are right now. It's 7:45 a.m. London. We've got spot gold at 1546. Yes, it's down 10. It's got down as far as 1540. The range has been 1561 to 1540. Yesterday, of course, gold had a wild ride early on overnight. We spiked to 1611 on the news that Iran had fired missiles or rockets at U.S. bases in Iraq. Later on, things calmed down. Even the stock market was down 450 points overnight. But then President Trump made his speech, calmed things down, and things turned around completely. So it's not just a manipulation that's happening there, it is also the unwinding of flight to safety trades. So silver, the interesting thing about this morning with silver is I noticed that silver was hit before gold, over an hour before gold. And gold was still holding around 1555, 1560. Silver got hit down to 1779. That's one of the things they do when they have a tough time getting gold to go lower. They go after silver because silver is a smaller market, easier to move. And then that puts pressure on gold. So silver, though, has rebounded. It's at 1790 now. It's only down 20. It was down a lot more before. It's down 1%. The range has been 1821 to 1779. The Dow is up 140. So S&P and NASDAQ made all-time highs yesterday. And that's continuing. Not surprising. Central banks are still pumping the credit into the market, or the money as well. So we're at 28,882, up 0.5%. S&P up another 17. NASDAQ 100 future up another 55, or 2/3%. So all's well right now with financial assets. Another reason why gold has fallen, and silver. Currencies, while sterling right now is 131.12, that's up slightly, about 1/8%. The euro is at 111.18, up 1/8 as well, and the dollar is up against the yen at 109.29. Dollar's still fairly weak against the yuan at 6.92. It's down 0.2%. Crude oil, very volatile as well. WTI is now below 60. It's 59.63. It's up 1/4%. Brent crude 65.32, up 0.1. Bond markets as well have had a wild ride. We saw a low 10-year yield of 170 yesterday. Right now we're at almost 188. Gold manipulation or price control of gold and why you shouldn't lose sleep over it. Well, I'll give you my opinion and how I cope with it. And it hasn't been easy. I've been aware of gold price manipulation almost ever since the beginning when I started accumulating gold back in 2002. At the time, of course, I used to be in front of a screen half the day in the city of London watching all the markets. I started watching gold more closely, of course. It wasn't the core of my business, gold. That was just a private placement for me of some of my savings. The bulk of the business I did in the city was in the bond markets, but I started noticing some patterns in the gold price. For example, just before the official open on COMEX at 1:20 London time, gold would a lot of times dip, especially if you had gone up during London time. It would dip massively on the open. The other thing I used to notice is that generally if gold was higher in the morning and going into the open on COMEX, you would not only see the dip on the open, you would see a continuous sell-off. And the other thing I noticed is after the 3 p.m. fix in London of the LBMA, you would see a lot of times COMEX gold or the paper gold start going down after the physical market closed in London. So I've been aware of it for many years. I've contacted some of the bullion banks at the time. I think it was UBS. I used to speak to the guy there, John Reed, who was the bullion, the head of the bullion department there. I even asked him if he saw any manipulation, but he denied anything, of course. And I've followed GATA, GATA.org, Bill Murphy, and I have been following his work. And yes, it used to kind of upset me a lot. All the manipulation used to stress me out. But that was when gold was 320. Now we're at over 1500. We've been over 1900. So you might be saying, if it was manipulated, how come it's gone up? Well, it's not as simple as that. I think the reason gold is manipulated or made to look very risky, just like any other commodity, is to keep the general public away from gold. And why is that? Well, because you don't want the general public, if you are a central banker, you don't want them to know the great qualities of gold, that it's been money for 3,500 years, that it's the most stable store of value. It's competition for their phony fiat paper. So that is, in my opinion, is why they manipulate the gold price. They make it look risky. They make it look like you shouldn't be involved. The other thing is, if they allow gold to trade freely, I don't think we'd be in the situation we are in terms of all the debt. The system would have come down a lot quicker. Yeah, my advice for people, and I usually don't give advice, but this is more of a psychological advice, so it's not market advice. If you already have gold and you've read or listened about manipulation, I don't think you should lose any sleep over it. Now I want to show you some charts of gold going back to 1968. in US dollars, in British pounds, and in euros. And you can see that the long-term trend is up for the price of gold or down for the dollar. This is from the LBMA. Here's the pound chart. The same thing. We're at near all-time highs in pounds, of course. The same thing for the euro. Euro chart is not as old. It's since the inception of the euro. But look at that. It was at 200 euros at the inception. We're now at around 1400. And why can't the banks, central banks and bullion banks, just keep gold pegged, let's say, at $1,000 and not let it move? Well, because people would twig onto it because they're still inflating the system, and they would probably clean out the central banks from their gold reserves or the sovereign gold reserves. They would clean out the market, because if you keep price down for too long, people who know what's happening would take the gold out of the market. Central banks would lose all their gold. They'd be cleaned out. They have to let the price go up. What's the only way to get the price of gold fixed against fiat? In my opinion, is to stop inflating the fiat, set it at a level relative to a country's reserve, and then not inflate the system. Or if you do inflate the system, it's at a level where the supply of gold is flowing into the economy. That's the only way they can do it. But right now we know that they're continuing to inflate the system. They're continuing to print money, and not only that. I wanted to talk about this article that's come out a few days ago about the UK. It's not only monetary accommodation now. We know the US has been spending like a drunken sailor, running huge deficits. Now the UK is joining the party. This is from January 7th from the FT. It says, borrowing bump sets UK as test case for bond market. Mild market reaction suggests investors are resilient to extra fiscal spending. But the interesting thing about this story, and I'll go through it right now, is this. Boris Johnson's borrowing spree has started early. Officials in charge of managing the UK's bond issuance shook debt markets from their New Year slumber on Tuesday by announcing an extra 14 billion of gilt sales in the current fiscal year, which runs to the end of March. It might not sound a lot. I know the US Treasury is a much bigger spender, but you have to realize the UK's economy is a lot smaller than the US economy. So it's quite big, 14 billion. The scale of the increase, which bumps up gilt issuance for the full year to 136.8 billion pounds, clearly took investors by surprise, generating a dip in UK government bond prices at the start of the day's trading. The move made the UK something of a test case. Will investors punish governments for indulging in more borrowing this year? Right now, investors are still comfortable with all the debt that's being created out there. But all it means, debt, government debt, issuance, and borrowing is inflation. So what I'm trying to say, it's not going to end. It's not only the central banks that are going to inflate. It's the governments fiscally. Who's going to be buying all that debt? Well, right now investors are buying it, but they're only buying it because they know that the central banks, the Bank of England, have their back. So they've got this put. It's called the QE put. Central bankers will make sure that rates stay low. Can that go on forever? I don't think so. Nothing that is unnatural, that's conjured up out of thin air, lasts that long. If it worked, Zimbabwe, Weimar Germany would still be around. The Reichsmark wouldn't have collapsed. We wouldn't have had the hyperinflation. Had the Zimbabwe dollar go down in flames, Zimbabwe would be the richest country in the world, but it's not. So don't lose sleep over the movements in the price of gold. Just be aware that they're going to continue to inflate the system. They're going to continue to debase the fiat currencies, and the major beneficiaries are going to be gold and silver. I've been exposed to this for almost 20 years now, and I'm kind of immune to it. So hopefully this won't put people off or put you off from protecting yourself. It's up to you, of course, to do your homework and decide, not for me. This is just my experience. If you enjoyed this video, make sure you hit the like button. Please share this video far and wide. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.